Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains, and today we're breaking down everything investors need to know about Lululemon heading into the company's Q2 earnings release on September 5th. But before we do that, I want to say, remember, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcast@zacks.com. Also, make sure to subscribe and leave a review wherever you listen to your podcasts. So as I said, we're going to look in to see what to expect from Lulu's Q2 results, which are due out September 5th. And we're going to break down other things about the yoga apparel firm as its impressive run continues. And overall, for a quick recap, the Q2 earnings season is mostly behind us now. And it's been a relatively mixed bag for retailers, with the department stores, including Nordstrom's and Macy's, once again failing to impress investors. But meanwhile, the likes of Target and Walmart have really proved that their e-commerce push and all of their new delivery and curbside pickup initiatives have really helped them prove that they can thrive in the Amazon age, where the narrative a couple years ago was that Amazon's going to even affect the big giant players such as Walmart and Target. But that has proved not to be the case whatsoever. But on that note, I want to jump into Lululemon. For those of you who don't know, it's started as a yoga apparel geared mostly towards women. But since then, Lululemon has kind of jump-started this overall athleisure market that's seen everyone from Nike and companies owned by The Gap and even L Brands, Victoria's Secret, and companies such as Target roll out their own lines of athleisure that's now expanded into more work-appropriate clothing. The company also has a growing menswear business, outerwear that is competing alongside Canada Goose and the North Face. They're jumping into self-care products. As I mentioned, their clothing is now not just the yoga pants and running clothing and all of that. They're selling things for both men and women that you could easily see anyone wearing to work as workplaces become a little more casual. So that's how they've expanded their business recently. So overall, the company ended, in terms of its stores, it has 455 around the world, which is a lot, but not as big as obviously some retailers. But that was up from 411 in the year ago period. So they've opened roughly 40 stores over the last year. And in general, over the next 4 years at this point now, Lululemon executives expect to double the size of its menswear revenues. Plus, the firm also projects that it will more than double its digital revenues over that point and quadruple its international sales. And this expansion is going to come mostly outside of North America and Australia and New Zealand, which is where a majority of their stores are now. So this is going to be in Asia and Europe is where they're going to see their big international expansion, or they hope to see their international expansion. So then in terms of Q1, which is the most recent numbers we have from them, overall their men's revenues were up 33%. Last quarter, North America was up 18%. Digital revenues were up 35%, so some really impressive growth there. And then that key international revenue was up roughly 40%. And now I quickly want to break down a little bit about what we learned on the company's earnings call from Q1, since not much has come out since the first quarter in terms of really Lululemon specific offerings. So over the next 5 years, the company is expecting its annual growth in its core women's business to be in the low double digits. And then, as I mentioned, its menswear is planned to grow at around 20% per year. And then in quarter one, the company continued to see what it called robust performance in its women's business, with particular strength in its bottoms. So that's just anything from shorts to yoga pants to any other thing that they're selling for your bottom half. And then this category, this is from the earnings call, this category remains one of our strongest, with comps up over 19%, driven by both leggings and jogger styles. And then meanwhile, its men's business saw its comps expand 26% last quarter, And then this is something a little close to home because what they also talked about in the earnings call for a little bit is they opened up a new store that they call their first truly experiential store in the Lincoln Park area of Chicago. This summer, I've been in there with my wife. It's a 20,000 foot store that has what they say that this is the CEO's little CEO speak of captures who we are as a brand, as it will embody the quote sweat life through multiple studios, meditation space, a healthy juice, and food offerings and areas for community gatherings. So basically, it's a massive 2-level store. They have a yoga studio, they have a little restaurant with smoothies and coffee and all of that jazz. It's a massive store. They're using this as a test case to see if they can facilitate these larger stores maybe throughout the country in some big places like Chicago or something, or New York. Obviously, it's already open in Chicago. But the store was impressive, and it was packed when we were in there a couple weeks ago. So I guess the one day we were on there Saturday might not be indicative of what it's always like, but that's just something to note as a way they're trying to expand. Where other stores are shuttering stores throughout the country, Lululemon's opening their biggest stores ever right now. This is something you've also seen from Restoration Hardware and a couple other bigger retailers recently as they're opening up these massive experiential locations to drive brick and mortar foot traffic. And then the company also continued to test its membership program. It expanded to its third pilot city, which was Austin, Texas. The company's saying they've been encouraged with the results, but they're going to continue to test it, and it's not going to roll out on a big basis just yet. And then, meanwhile, this is still, once again, from what we learned from the earnings call, the company noted that they've expanded their online-only size and color offerings, so they're offering way more stuff online than is available in actual stores. They also expanded their buy online and pick up in store capabilities from what was only 35 stores in the year ago period to 150 in the first quarter. So it said with 80% of orders ready for guests to pick up within 1 hour. So this is that trend of ease and give people the most options of how they want to shop. And then the company also noted that it was on track for a full rollout of this by the end of quarter 3. And we also, or the company, this is see what they call significant improvement of their mobile point of sale capabilities. So this is within stores. Most employees, I can't say all employees who are working there at stores, will carry around a little point of sale device, and they'll be able to check you out instead of going up to the counter. So they're trying to make it as easy to buy things as possible. So that's something to focus on as well. So those are all overall menswear expansion, international expansion, continued expansion in North America, their women's business in general. They're doing lots of things to try to grow. But now I want to start looking ahead to what to expect from the quarter. But before we do that, I want to take a step back and just give people a sense of how Lululemon stock has performed, not only this year, but over the last several years as well. So since 2014, Lululemon stock is up 366%, with a lot of this jump coming. The last couple of years have been very good for Lululemon, but as I said, the last 5 years have been very strong as well. This easily crushed Nike's 117% climb, and the overall apparel market's only up around 25%. So Lululemon's up over 350% over a 5-year period, and the apparel market in general is up roughly 25%. And then if we take a look at just this current year, so fiscal or full year 2019 so far, year to date, Lululemon stock is up roughly 36%, and that compares to Nike's 5% climb and its industry's 8% average decline. So they look even stronger so far this year compared to its biggest. I don't know if you can necessarily call Nike a rival at this point because they're operating a much, much more expansive business that's geared toward a broader audience. But Lululemon hopes to one day maybe get to that level of where they are seen as a somewhat direct competitor with Nike. But As I said, that growth has really been there for Lululemon over an extended period of time. And now I want to look ahead at our Q2 estimates for Lululemon to give people a sense of what to expect later this week. So looking ahead, Lulu's Q2 revenue is projected to climb roughly 17%, so just under 17%. And this is going to be seeing them reach $844.3 million, and this is based on our Zacks consensus estimates. We should note that this would come in below last quarter's roughly 20.5% sales expansion, but it would come on top of the year-ago period's 25% top-line growth. So some impressive growth for Lululemon still. And it is worth noting that Lululemon has posted 5 straight periods of sales growth between 20 and 25%. So if they do reach our 17%, some people might be a little nervous that there's a slowdown. But if we look over a longer period of time, Lululemon's revenue growth often hovered in that mid-teens growth. And I'm going to get into some of the full year numbers to give people a better perspective. So looking further down the line, the athletic apparel firm's fiscal 2019 sales are projected to climb 15.5% to $3.8 billion, and then 2020 is expected to come in 15% above that to roughly $4.4 billion. This, as I mentioned, would mark a little bit of a slowdown compared to 2018 when they saw 24% top-line growth, but our 2019 and 2020 projections would see Lululemon actually surpass its growth rates from between 2014 all the way through 2017. So even when they were growing, when they were a younger company than they are today and seeing massive stock price growth, that our current 2019 projection is above those 2014 through 2017 top-line growth rates. And then at the bottom end of the income statement, Lululemon is projected to see its adjusted Q2 earnings jump over 25% to 89 cents per share. Once again, sensing a little bit of a trend, this would mark a slowdown from Q1's 35% earnings growth, but nothing to scare people off there. And we should note that Lululemon has easily topped our earnings estimates over the trailing 4 periods and has seen its earnings estimate revision activity trend heavily upward recently. And then overall, we're calling for 21% earnings growth in fiscal 2019, and then another additional 20% growth in 2020. And as we close this out, I want to say that despite its impressive growth so far in 2019, Lululemon stock does rest roughly 7% below its 52-week highs, which could give the stock some room to run heading into or following earnings. And investors, more than anything, should pay close attention to some e-commerce updates, comparable store sales, all of that, any expansion internationally as well. Excuse me. And then even if the company were to fall short of these Q2 estimates, it's now one of the bigger names, or at least one of the more talked about names in retail. It's really hard to imagine with our growth projections and the company's massive growth projections for itself over the next several years that Lululemon stock doesn't at least continue to climb for the foreseeable future. Obviously, anything can happen, but as I mentioned, Lululemon is scheduled to release its Q2 fiscal 2019 financial results after the closing bell on Thursday, September 5th. So make sure you come back to Zach's website, and we'll have a full breakdown of what actually happened there. And then, as a quick side note, I mentioned that Q2 earnings season is winding down. So aside from Lululemon this week, Wall Street and some investors might want to turn their attention to Slack, which trades under the ticker WORK. They're set to report their results Wednesday afternoon, and the shares of this newly public work-focused communication tech platform have fallen pretty heavily since their June IPO. This coincides with Uber and Lyft's disappointment, which then contrasts with Pinterest and Beyond Meat, who have done really well. So that's just another company to pay attention to as they try to maybe bounce back from their early struggles as a newly public company. But that does it for today's episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.